The minutes from Kevin Warsh's first meeting as Fed chair show that a few Federal Reserve officials said there was a case for raising rates, even as they decided to keep rates on hold in June, as we try to glean more insight into what caused this more hawkish shift on the committee. Keeping in mind that this was the meeting where we saw those projections basically show that there are these two equal camps that were emerging on the FOMC, as 9 members saw at least one rate hike this year and 9 members saw no moves or a rate cut. And that was really reiterated in these minutes, reflecting the view among officials that some see higher interest rates needed, while others say that there is still a case to stay on hold. The minutes tell us that the discussion really centered around inflation risks and restoring price stability. Writing in part, quote, participants judged that the risks to the inflation outlook were tilted to the upside. They observed that both core and total inflation had moved higher, generally attributed to the increases to the lingering effects of tariffs, supply chain disruptions, and the related to the closure of the Strait of Hormuz. But then there was also this discussion around the CapEx build-out related to artificial intelligence. On that, the participants said, quote, many participants noted that ongoing strong demand for AI infrastructure would likely sustain upward pressure on prices for technology products and electricity, going on to add that some participants remarked that productivity gains associated with AI adoption would eventually reduce production costs and increase aggregate supply, which should put downward pressure on inflation, though they noted that effect would likely take time to materialize. On the labor market, participants generally saw labor remaining stable in the near term, adding that they assessed that the downside risks to achieving maximum employment had moderated a bit. Now, a huge question, of course, going into today was what would these minutes look like under a Fed chair, Kevin Warsh? And we have our answer, which is that they basically look more or less the same. All the same sections were there. We didn't really feel that they were shortened in any sense. We can say that it would take a majority of the voting members to approve the minutes. So maybe there wasn't a consensus there when it comes to what we know Kevin Warsh would like to see in terms of changes to the Fed's communication style, because Carroll and Bailey, so you both know, Warsh has vowed to move the central bank away from forward guidance. That was included in this statement, with a majority of participants remarking that they saw advantages in shortening the statements after FOMC decision.